Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Ethereum. We're going to be looking at its current move. If you guys like the content, please subscribe to the channel, give the video a thumbs up. We do not react emotionally on the channel, to price moves to the downside or the upside, whether it's euphoria or whether it's a fear. We stick to a strategy, and that strategy, is systematically coming up with a plan in order to say buy or sell. This is what I do anyways. It's not financial advice, in order to set ourselves up for success during the market cycle. So make sure you subscribe. We also do have a Telegram channel that you can check out, and please give the video a thumbs up. I feel like I don't say that enough. I would like to see a lot of likes on the videos, just so it's helped out in the YouTube algorithms. So we've been following Ethereum for a while, right? And we've been talking about all these moves in terms of dynamically dollar cost averaging into the market, right? So when the price goes down, I buy more. When the price goes up, I buy less. When we come into, say, a speculative bubble, this is when I start taking profits, right? And it corresponds to a dynamic strategy based on the risk metric. So I'm not going to show you the risk metric in this video, but there are plenty of videos on the risk metric for Ethereum if you want to check out those on the channel. Now, the idea, right, is we don't know where the top is. We don't know where the bottom is. And so what you do is, you just systematically enter and exit the market, right? So if you're DCAing every so often, maybe you're buying here and here and along the way up. But at some point, right, as you come higher, what I do is I put less money in this region than I am down here. So I always give myself room, right? I always leave capital on the sidelines to put more money in when the price just drops like a rock. And even especially coming back down to the regression band, if that were to happen, then it's important, right? I say there's a risk to holding Ether, there's a risk to holding Bitcoin, there's also a risk not to holding them. And in the same manner, there's a risk to not having capital set aside to take advantages of inevitable corrections in the market, right? We know there's going to be 30 to 40% drops even in a bull market. Today we haven't even seen much of anything. We're just like a 5% drop. This is just par for the course, but it's just it's kind of like a nice friendly reminder, because I do know there's a lot of new people in the crypto space. A lot of people entered in March and April, and so these moves in a single day can be somewhat scary. And I'm here to, send the message to you that these are going to be very common, right, during the market cycle. And we've shown that before, right? If you look at Bitcoin, you can see all the 20 or 30% drops down to the 20-week moving average, even in a bull market, right? And because of that, in the same way that I buy on the way up, there's got to be a point, right, at which you start systematically taking profits. Because if you hold forever, I remember holding or hodling is just a meme. It's not a strategy, right? If you held through 2017 and 2018, then you're probably cringing a little bit on the inside. So the point is to recognize throughout the market cycle, we don't know where the top is, and we don't know where the bottom is. But what we do is you can almost set up, it's almost like another revenue stream in a sense, if you just put in money when the market's low and then systematically take money or take profits when it gets to a higher risk level. Now, in terms of the risk levels, I'm not showing the risk metric in this video, but for those on the premium list, right, we did talk about at 400. So at this point, This was the, at the time, 400. So remember, the risk levels change dynamically because the market changes, right? So what's 0.5 risk today might not be 0.5 risk next week or next month. It all depends on the markets. So there was an alert on the premium Telegram channel, right, saying when we crossed over 400, that I personally was setting a stop loss at the 0.5 risk level, which at the time was at $400, and then I took those profits. And the thing is, right, is when you follow this strategy, you don't, if you see a wick, like, all the way down, let me delete some of these circles so it's not so hard to follow. So the idea, right, is when you get to a risk level, so, obviously a couple weeks ago, $400 was the 0.5 risk level. So when you get, and it's not anymore, by the way, but when you get to that risk level and you see the wick come above it, I was actually on a live stream when that happened, and I was subsequently typing in the alerts channel, hey, like we're above zero point 0.5 risk. You might want to consider, a stop loss if you're looking to take profits at the 0.5 risk regime. Now, some people, they did that, and I think a lot of people did that, and then some people even rebought back down here. So, admittedly, I'm honest with you guys. I did not buy it this week. So I did not sell at. I sold at 400, right, in the short term, but I did not rebuy back in at 320 or something. Like I didn't have, I did not do that. And the reason I don't do it is just because I would consider that too much trying to time things. And of course it does work out for a lot of people, right? If you're able to sell up here and then immediately buy back in for 10% more ether. I mean, this seems like a win-win, of course. It's not really the strategy I use. What I do is the money. So I sold 1/10 of my ether at around 400, and then that money just goes into the pool of money that I draw from to DCA into the market. So I buy ether once a week. I buy Bitcoin once a week. I check the risk level, whatever it is. I put in money corresponding to that risk level. If the risk level drops, then I have that money set aside to put in more money. And if it goes back up, then I stop buying and I just take profits. So the idea in this scenario, right, is what I do is I take profits when we get to the 0.5 risk level. So I took profits at that level. And then if the risk comes back down, then every week, I DCA that money back into the market. And if Ethereum, if the risk of Ethereum or the price of Ethereum is coming back down, then of course a lot of that money would be going back into Ethereum to slowly and systematically build back up a position commensurate with the one I previously had, and hopefully more than the one I previously had by the time the price goes back to that level, right? This is the idea. If, on the other hand, the price just comes back down in the short term, and let's say that it doesn't bleed any more than this. I mean, I don't know if it will or not. I mean, it could come back down, right? But there's always a chance that it slowly trickles back up. And if it does, if it comes back up, I don't immediately then take profits again at this risk level because I already sold 1/10 of my ether position, right? It's from then on out, I'm just not buying, and then I just wait for the next risk level at whatever price that corresponds to. So this is the strategy. The only reason I would, take profits again at this risk level is if we come back down, and then we're within the regression band, and I'm able to reaccumulate all the Ethereum I had, my original position, and then some. If that happens, and then we come back up to this risk level, but at that time the risk level might be higher than it was over here, then what do? I then sell 1/10 of my ether position if I was able to reaccumulate all the ether I previously had, if we come back down in this region. So the nice thing about this strategy, right, is it has nothing to do with predicting exactly what's going to happen in the short term because we don't know. It's, as I've said before, it's geometric Brownian motion in my opinion. It's a random walk. We cannot predict what's going to happen in the short term. We can speculate, right? We can speculate and say, I think there's a good chance over the next 12 to 18 months, Ether will get to, somewhere between 750 to 900. I think there's a good chance that'll happen. What I can't say is whether that'll happen tomorrow or not. But if it does happen tomorrow, we're prepared for it. So it's all about having a strategy, right? It's about having a strategy and sticking to it. If, for some people, the 0.5 risk level, which was $400 a few days ago, is not something they feel comfortable selling at. They would prefer to raise the ante and sell at, say, the 0.7 risk level. And that's the nice thing about the risk metric. You can see what I do. I tell you what I do. And then if you think I'm too conservative or too liberal with my own investment strategy, you can tailor it to your own. And you can follow the same type of strategy, but you just might buy to a higher risk level or sell at a lower risk level. For instance, if you have a lot of capital, if you have a significant portion of capital tied up into crypto, and obviously significant can mean a lot of things to a lot of different people, then your risk tolerance might be lower. Maybe you start selling at the 0.4 risk level rather than 0.5. So the point, right, is to just come up with a strategy to navigate the cryptocurrency market, because it's a hard market to navigate if you don't have a plan. And I'm trying I'm trying to come to you guys to say, you know what, it's better to have a plan than to not. And some of the comments I see on the YouTube channel, and there could be some merit to it, right? Is just is just hold. But the issue with just holding, right, is what happens if Ethereum goes to 750 and you just hold, and then it comes back down to 400, and then you just hold. If you follow, say, a systematic strategy throughout that period, it allows you to take profits anytime any bubble forms, whether it's a small bubble or a large bubble. So like with Bitcoin in 2019, the risk level came up to around over 0.6 or so. So what it does is it allows you to take these profits, in this region. That you may have otherwise never taken. You put that money into the bank account, right? And then if the price comes back down, you re-enter. If it doesn't, if it had kept going up, then what I would do is just continue to take profits along the way as you go up. So in effect, what it does is because crypto is volatile, because it goes up and it goes down, bubbles form, we go into bear markets, you just rinse and repeat. It effectively can create, if history is any indication, it can effectively create, say, like another income stream if you're disciplined about, say, taking profits at higher risk levels whenever they come, and being okay with the fact that there could be a 1 or 2 year bear market at times, where you're not able to take profits that frequently. But if bubbles do form, right? So if bubbles do form, then it allows you to take advantage of something like that. So that's the point. If you guys want access to the premium alerts group where I tell you, a lot of these strategies, make sure you check out my premium list at intothecryptoverse.com. You get access to the alerts channel, a Telegram alerts channel, a weekly report, a weekly video. They're all premium. They're not on the public domain. And then also a Google Sheets risk dashboard. So I would urge you guys to get in now if you want to follow my strategy, because in a few weeks here, I'll try to give a specific date soon, but in a few weeks here, the prices will go up, and if you're already paying, then you'll be grandfathered in. If you decide to subscribe, later on in the year, then you would have to pay the higher price. So I would encourage you that if it's something you've been sitting on for months and months and months, and you say, okay, I will subscribe eventually because I like the strategy he has. Just be aware that the prices will be going up here in a few weeks, and for those who get in now, you'll be grandfathered in at the lower price. And just a reminder that if you pay for 6 or 12 months, you'll get a discount. Actually, paying for 12 months, you'll get a 15% discount. So do consider signing up. Obviously, you could always sign up for 1 month and then cancel if it's not your thing. But I do think a lot of people are finding value in it. Again, it's a systematic strategy that we're going to use to navigate the market. So I hope you guys found the information useful. We'll continue, obviously, to watch what Bitcoin and Ethereum, what they do in the short term, to kind of, to follow whether we're heading back into bubble territory, or if, on the other hand, we come back down into the regression band. Both present opportunities. It's just a different type of opportunity that they present, okay? So if you guys like the content, please subscribe, give the video a thumbs up, check out the Telegram channel, and I'll see you next time. Bye.